Welcome back to the ProTicker Podcast. It's your Friday morning edition covering major financial magazine headlines.
Yeah, it's a wild week out there in the markets. We got
Buckle up.
buckle up.
Yeah, we got Bitcoin rocketing, the euro's taking a tumble, the US dollar is surprisingly strong, and even the housing market's doing some unexpected things.
Yeah, it really shows how everything's kind of connected. Political decisions, economic data, even global conflicts. It's all swirling around, impacting how investors are feeling.
Right, so let's break this down, starting with Bitcoin.
Mm.
Bloomberg's reporting it's getting really close to that $100,000 mark, which is huge for the crypto world.
Yeah, it's a big psychological barrier.
Is this a sign that Bitcoin is finally going mainstream? Or are we about to see a bubble burst?
Well, it's hard to say for sure.
That's it.
President-elect Trump's pro-crypto stance
Yep.
and SEC Chair Gensler's departure, that's definitely adding fuel to the fire. Bloomberg even reported on that. It's like a signal to those who believe crypto is going to disrupt traditional finance.
Right. And
Yeah.
we're actually seeing this play out in real life, right?
Yeah.
Bloomberg also mentioned MicroStrategy, the software company. They're basically going all in on Bitcoin.
Yeah, buying up as much as they can. And we're seeing Bitcoin ETFs popping up everywhere.
Slash it
Bitcoin.
in media.
Yeah. But like with anything in finance, there's always another side to the story. CNBC contributor Ron Insana, he's comparing this whole Bitcoin frenzy to the Dutch tulip craze back in the 1600s.
Wow.
His point is, until people are using Bitcoin for everyday transactions, it's more about speculation than actual utility.
Is it a game changer or just a bubble waiting to pop? I guess time will tell, but it's definitely shaking things up. Now, across the Atlantic, the euro's having a rough time. Bloomberg's reporting it hit a 2-year low against the dollar.
Yeah.
What's happening over there?
There are a lot of factors at play. Weak economic data, speculation about the European Central Bank cutting rates aggressively. It's making investors nervous. Bloomberg even mentioned the market's giving the over 50% chance of a half-point rate cut. That's a big deal.
Wow. And then there's the political uncertainty too, right? Especially in Germany and France, the powerhouses of the Eurozone.
Right. Bloomberg's saying all this instability is adding even more pressure to the euro.
And on the flip side, the U.S. dollar is almost at a 13-month high. CNBC reported that. I guess Trump's policies, especially the ones focused on trade, are playing a big role.
Yeah, those trade policies, especially the tariffs, they could have a big impact on Europe and China.
And I'm thinking the potential for inflation under Trump is also a factor.
Yeah, the market's trying to figure out how these policies are going to impact inflation and how the Fed will react. It's interesting. CNBC also mentioned that the market's expectations for a Fed rate cut in December have actually gone down this week.
Wow, things change fast.
Yeah.
Here's what I'm not getting, though. CNBC also reported that gold is having its best week in over a year. But doesn't gold usually go up when the dollar's weak?
Usually. But right now, we're seeing what's called a flight to safety on two fronts. The situation between Russia and Ukraine is escalating. And that's pushing investors towards both the dollar, which is seen as stable and liquid, and gold, a classic safe haven.
Interesting.
CNBC also pointed out that oil prices, which are also affected by the conflict, have jumped by 5% this week.
So it's like a double dose of uncertainty. Geopolitical tension and potential economic turmoil with a new administration. Now let's move on to the U.S. housing market. This one really surprised me. The Wall Street Journal reported that existing home sales actually went up in October, which is unusual.
Yeah, lower mortgage rates earlier this fall really attracted buyers who were waiting for a better deal. The Wall Street Journal even featured a family from Washington, the Seeleys, who got a great house thanks to those lower rates.
It's great for them.
Talk.
The Wall Street Journal also mentioned that rates are starting to climb back up. So what does that mean for the housing market going forward?
It's a tricky situation. Higher rates make homes less affordable, especially for first-time buyers. But they also make homeowners with those low mortgage rates less likely to sell. So it's a bit of a standoff.
So even though sales are up right now, buyers need to keep a close eye on those rising rates.
Right. And finally, we have a story that shows us even the giants of finance can get caught up in some shady dealings. Bloomberg is reporting that JP Morgan Chase is being investigated for possible ties to a hedge fund that's linked to an Iranian oil trader.
Yikes.
Yeah.
This investigation is all about JP Morgan's relationship with a company called Ocean Leonid Investments Ltd, which got suspended by Dubai's financial free zone.
Oh, wow.
Both the U.S. Treasury and the Federal Reserve are looking into whether JP Morgan might have violated sanctions against Iran.
So Bloomberg is basically saying even the biggest banks have to be super careful about who they do business with.
Absolutely. Compliance is a huge deal in the financial world. There are strict rules to prevent things like money laundering and terrorist financing. Even a hint of wrongdoing can have serious consequences. So, from Bitcoin's record highs to the euro's struggles and the US dollar showing its strength, we've covered a lot today. But here's where things get even more interesting.
Oh, yeah. Remember those market implied odds of a rate cut by the ECB? Well, let's dive a little deeper into what that actually means. It's
Right.
basically a way to figure out how investors are feeling using real-time market data.
So it's not just economists making predictions. It's like the market itself is voting with its money.
Exactly. Traders buy and sell financial instruments that are tied to future interest rates, and the prices of those instruments reflect the collective wisdom or fear of the market.
Okay.
So when the implied odds of a rate cut go up, it means more investors think a cut is likely.
So in the case of the euro, that jump to over 50% is a pretty strong signal that the market sees a rate cut coming.
Right, and this ties back to what we talked about. With the US dollar's strength, if the Fed doesn't cut rates, and the ECB does, that makes the gap between the two currencies even bigger.
That makes sense. Okay, so that explains the currency moves. But what about gold? You said it's often seen as a safe haven. But how does that actually work?
Well, gold has this unique historical and psychological appeal. It's been a store value for centuries. And when things get uncertain, people tend to go for things they see as stable and long-lasting. It's like a hedge against uncertainty.
So even though the US dollar is also strong right now, some investors are putting money into gold too, just in case.
Exactly. It's about diversification and managing risk.
Right. Okay, let's shift gears a bit and talk about the U.S. housing market. We mentioned how those lower mortgage rates led to that jump in sales. But as with anything, and there are always things going on beneath the surface.
Sure.
Yeah, the Wall Street Journal pointed out the rates were already creeping back up, so that boost might be short-lived. But what about the bigger picture? Is the housing market actually healthy, or are we just seeing a temporary bump?
That's the million-dollar question. The fact that current homeowners don't want to sell because they don't want to lose their low mortgage rates. That's a big factor. It limits the number of homes on the market, which can drive prices up.
And that makes it even harder for first-time buyers, who are already struggling with affordability.
Exactly. So while lower rates might have sparked some activity, we need to look beyond the headlines. The long-term health of the housing market depends on a lot of things: job growth, wage increases, overall economic stability.
Okay. Speaking of looking beyond the headlines, let's go back to that JP Morgan Chase investigation. You mentioned compliance being a big deal in finance. Can you break that down for us? What does that actually mean?
Think of compliance as the guardrails that keep the financial system on track. It's a whole set of rules, regulations, and internal controls that banks have to follow to prevent things like money laundering, fraud, and sanctions violations.
So in JP Morgan's case, the investigation is looking at whether they were careless in their compliance procedures when they took on this hedge fund as a client.
Exactly. Banks are legally required to know their customers. They need to understand where their money is coming from, where it's going, and make sure they're not involved in anything illegal.
And if they fail to do that, the consequences can be serious.
Oh, yeah. We're talking big fines, reputational damage, even criminal charges in some cases. That's why banks invest so much in building strong compliance programs and hiring teams of experts to monitor transactions and assess risk.
Okay, now for something a little different, leverage. It's a term that gets thrown around a lot in finance, but I think it deserves a closer look.
You're absolutely right. Leverage is basically using borrowed money to amplify your investment returns. Think of it like a multiplier.
So if you have $100 and use 10x leverage, you're controlling $1,000 worth of assets.
Exactly. And that can boost your gains if the investment goes your way. But here's the catch. It also magnifies your losses if things go south. That's why leverage can be so risky, especially in volatile markets.
And this is particularly relevant to the JP Morgan case, because they supposedly offered leverage to this hedge fund, which might have made the potential losses even bigger if things went wrong.
Exactly. Leverage can turn a small problem into a big one very quickly. And in the world of high finance, where billions of dollars are at stake, even a tiny miscalculation can have huge consequences.
Okay, speaking of miscalculations, let's go back to Bitcoin for a minute. We've been talking about its potential for growth, but what about the risks? Are there any inherent weaknesses in the technology itself that could derail its progress?
That's a good question. One of the biggest challenges for Bitcoin is scalability. As more people use it, The network can get congested, leading to slower transaction times and higher fees.
So it's like a highway getting jammed during rush hour. The more cars on the road, the slower everyone goes.
Exactly. For Bitcoin to truly become mainstream, it needs to be able to handle a lot of transactions quickly and efficiently. Developers are working on solutions, but it's an ongoing challenge.
And then there's the issue of regulation, right? Governments around the world are still figuring out how to regulate cryptocurrencies, which adds another layer of uncertainty.
Absolutely. The lack of clear regulatory frameworks creates uncertainty for both investors and businesses, and it can hinder Bitcoin's adoption by mainstream institutions.
So while Bitcoin has come a long way, it still has some hurdles to overcome before it can really live up to its potential. Now let's switch gears again and talk about another asset class that's been in the news, gold. We mentioned its safe haven status before, but what are some of the other things that drive its price?
One of the key drivers of gold prices is inflation. When the prices of goods and services go up, gold tends to hold its value better than paper currencies, which can lose purchasing power during those periods.
So it's like a hedge against inflation, just like it's a hedge against uncertainty.
Exactly. And in today's economic climate, where inflation is a major worry, it's not surprising that gold is attracting investors.
Right. But isn't gold also affected by interest rates? I remember reading somewhere that higher interest rates can make gold less appealing.
You're right. Gold doesn't pay interest, like bonds or savings accounts do. So when interest rates go up, investors might shift their money to assets that offer a higher yield.
So it's like a seesaw. When interest rates go up, gold tends to go down, and vice versa.
Exactly. And that's why it's important for investors to understand the interplay between interest rates, inflation, and other factors that influence gold prices.
It's a reminder that no investment exists in a vacuum. Everything is connected.
Precisely. And that's why we do these deep dives, to explore those connections and help you make more informed financial decisions.
Speaking of interconnectedness, remember how we were talking about the U.S. dollar strength? Well, CNBC is reporting that this strength is actually causing problems for some American companies.
Yeah, that's right. A stronger dollar makes U.S. exports more expensive for buyers in other countries, which can hurt sales for American companies that depend on international markets.
So while a strong dollar might sound good at first, it can actually have some unintended consequences for certain businesses.
Exactly. It shows the complicated relationship between currencies, trade, and economic growth.
Now let's circle back to the JP Morgan Chase investigation. We've covered compliance and leverage. But what about the specific sanctions that might have been violated in this case?
The investigation is focusing on potential violations of U.S. sanctions against Iran. These sanctions prevent U.S. companies and individuals from doing certain types of business with Iran, including anything related to oil trading.
So if JP Morgan is found to have helped an Iranian oil trader through this hedge fund, they could be in big trouble.
Exactly. The U.S. government takes sanctions violations very seriously, and the penalties can be substantial.
Okay, let's switch gears and talk about a completely different aspect of the financial world, short selling. It's a strategy that often gets a bad reputation, but it plays an important role in the market.
You're right. Short selling is essentially betting that a stock's price will go down. Traders borrow shares of a stock they think is overvalued, sell those shares in the market, and then hope to buy them back later at a lower price, pocketing the difference as profit.
So it's kind of like the opposite of buying a stock and hoping it goes up. You're betting on the decline.
Exactly. And while short selling can be controversial, it can also serve as a check on market exuberance. Short sellers often do a lot of research on companies, looking for flaws or red flags that other investors might miss.
So in a way, they can help to expose fraud or overvaluation, which can actually benefit the market overall.
That's right. Short sellers can play an important role in uncovering problems and promoting transparency in the market.
Okay, now let's talk about a company that's been in the news a lot lately, MicroStrategy. We mentioned earlier how they've been buying up tons of Bitcoin. Why are they so bullish on this cryptocurrency?
MicroStrategy's CEO, Michael Saylor, is a big believer in Bitcoin. He thinks it's a better store of value than gold, and that it will eventually become a global reserve currency.
So they're not just dipping their toes in the water. They're diving headfirst into crypto.
Exactly. They've made Bitcoin a central part of their strategy, betting big on its long-term potential.
But this strategy has also been criticized. I remember Bloomberg reporting that MicroStrategy's stock took a hit after being targeted by short seller Citron Research.
That's right. Citron Research came out with a pretty harsh report, saying that MicroStrategy is misleading investors
Hmm.
about its Bitcoin holdings and that its stock is way overvalued.
So it seems like there's a real debate
Yeah,
about whether MicroStrategy's Bitcoin strategy is a good idea. Only time will tell who's right.
indeed. It's a risky bet, and the outcome is still up in the air.
Speaking of risky bets, let's talk about a company that didn't do so well, Northvolt AB, the Swedish battery maker. We mentioned earlier that they filed for bankruptcy. What happened there?
Northvolt had big plans. To
What?
be a major player in the electric vehicle battery market, they got billions of dollars in funding and made deals with big car companies, but they ran into some problems. Production delays, cost overruns, and fierce competition.
So even with a promising technology and a lot of investment, making it in the electric vehicle market is tough.
Exactly. It's an industry that requires a lot of capital, and companies need to execute perfectly to succeed. Unfortunately, Northvolt couldn't overcome the obstacles they faced.
It's a reminder that even in industries with huge potential, there are always risks involved.
Absolutely. Investors need to be aware of those risks and make sure their portfolios are diversified.
Speaking of diversification, let's talk about a company that seems to be doing really well. Flutter Entertainment, the parent company of FanDuel. CNBC reported that Goldman Sachs is very optimistic about Flutter's chances in the U.S. online gambling market.
Yeah, the U.S. online gambling market is exploding. More and more states are legalizing sports betting and other forms of online gambling, and FanDuel is a leader in this space.
So Goldman Sachs believes that Flutter is in a great position to take advantage of this growth.
And make a lot of money.
Exactly. They see FanDuel's brand recognition, user-friendly platform, and aggressive marketing as key strengths in this competitive market. It's a reminder that even in a rapidly changing industry, companies that can execute well and adapt to what consumers want can be very successful.
Absolutely. The online gambling market is definitely one to watch.
Okay, let's turn our attention back to the global stage. We've talked about the Russia-Ukraine conflict and its impact on oil prices. But how is this war affecting the broader European economy?
The war is causing a lot of uncertainty and volatility in Europe. Supply chains have been disrupted, energy prices have skyrocketed, and businesses are facing much higher costs.
And Bloomberg reports that this uncertainty is also dragging down the euro, contributing to its recent decline against the U.S. dollar.
Exactly. Investors are worried about a prolonged conflict, the impact of sanctions on Russia, and the ripple effects on the European economy.
So while the war is primarily a humanitarian crisis, it's also having a big economic impact that's being felt all over the world.
Absolutely. It's a reminder of how interconnected the global economy is and how geopolitical events can have widespread impacts on markets and businesses.
Right. Okay, let's shift gears and talk about something closer to home. The U.S. housing market. We discussed how lower mortgage rates led to a surprising increase in sales. But we also know those rates have been going back up. What does this mean for the future of the housing market?
Higher mortgage rates are definitely a challenge for the housing market. They make homes less affordable, especially for first-time buyers, and they can also discourage current homeowners from selling and giving up their low-rate mortgages.
So it creates this sort of push and pull between affordability and inventory.
Exactly. And what happens next will depend on several factors, like the overall strength of the economy, job growth, and wage increases.
So while the recent dip in rates might have given the market a temporary boost, the long-term outlook is still a bit unclear.
Absolutely. The housing market is complex, and it's always changing. Staying informed about market trends and talking to a qualified real estate professional are essential for making good decisions, whether you're buying or selling.
Okay, let's turn our attention to a story that shows how important transparency and accountability are. In the business world, Bloomberg reports that Gautam Adani, the chairman of the Adani Group, has been indicted in the U.S. on charges of bribery and corruption.
Wow. The Adani Group is a massive conglomerate with interests in ports, energy, and infrastructure. This indictment has really shaken up India's business community.
Bloomberg says the charges are related to Adani's alleged role in a scheme to bribe Indian officials to win contracts and licenses for his companies.
The Adani Group has denied the allegations, but the indictment has raised concerns about the company's corporate governance and ethical practices.
This case is a reminder that corruption can have serious consequences for businesses. It can damage their reputations, erode investor trust, and potentially lead to legal and financial trouble.
Investors should pay close attention to a company's ethical behavior and its commitment to strong corporate governance when making investment decisions. Companies that value transparency and accountability are more likely to create sustainable value for their shareholders in the long run. Yeah, it's really important for investors to consider those factors.
Absolutely.
Huh.
Okay, let's shift gears again and talk about something that's been getting a lot of attention lately, the metaverse. It's still a pretty new concept, but it has the potential to completely change the way we interact with technology and even with each other.
Yeah, it's pretty mind-blowing.
Can you give us a quick rundown? What is the metaverse and why is everyone so excited about it?
Sure. The metaverse is basically a bunch of immersive digital worlds that you can access using virtual reality and augmented reality. Think of it as a blend of the physical and digital, where you can hang out with people, play games, go to events, shop, even work, all within a virtual environment.
So it's like stepping into a video game, but with much bigger implications.
Exactly. The metaverse could transform so many industries: entertainment, gaming, education, healthcare, even real estate.
And we're seeing big tech companies
Yeah.
like Meta, Microsoft, and NVIDIA pouring tons of money into it.
Yeah, they're all trying to get a piece of the pie. It's still early days, but the potential is huge.
Speaking of new and exciting things, let's talk about another trend that could shake things up. Decentralized finance, or DeFi.
DeFi.
It's a pretty complex topic. Can you give us a simplified explanation? What is DeFi, and why is it gaining traction?
DeFi is basically a financial system that
Okay.
runs on blockchain technology, which means it cuts out the need for middlemen like banks, brokers, and other traditional financial institutions.
So like peer-to-peer finance.
Exactly. DeFi lets people do things like lending, borrowing, and other financial services that are usually handled by big institutions.
And it's all powered by blockchain, the same technology behind Bitcoin.
That's right. DeFi uses the transparency, security, and immutability of blockchain to create a financial system that's more accessible
Efficient.
and transparent.
It's a pretty radical idea, with the potential to give individuals more control over their own financial assets.
Absolutely. DeFi is still in its early stages, but it's attracting a lot of attention from investors, entrepreneurs, and tech people.
Now, let's talk about a company that's been in the news a lot, both for good and bad reasons. Tesla. They're a pioneer in electric vehicles.
Yeah.
But they've also faced some challenges and criticism.
Yeah, they've definitely had their ups and downs.
Can you give us an overview of Tesla's current position and what factors are shaping their future?
Sure. Tesla has been a true innovator in the EV market, but they're now facing tougher competition from both traditional car companies and new EV startups. Everyone wants a piece of the growing EV market.
So Tesla isn't the only player anymore. Consumers have more options, which means Tesla has to work harder to stay ahead.
Exactly. Tesla's success has inspired a lot of investment and innovation, which has made the market much more competitive.
And Tesla's also had some issues. Beyond just competition, there have been reports of production delays, quality control problems, and even concerns about the safety of their self-driving technology.
Yeah, those are valid concerns. Tesla's rapid growth and ambitious plans have sometimes led to mistakes and a lack of attention to detail.
So Tesla's in a tricky spot. They're still a leader in the EV market, but they also face some serious challenges.
It's going to be interesting to see how they navigate these challenges and what their long-term success looks like.
Okay, let's talk about something that's been on everyone's mind. Inflation. It's a global problem that's making everything more expensive.
Yeah, it's definitely a hot topic.
What are the main things driving inflation, and what can we do to bring it under control?
Inflation is a complex issue with a lot of contributing factors. One of the biggest drivers is a huge increase in demand. As economies have reopened after the pandemic, this pent-up demand, combined with supply chain problems, labor shortages, and rising energy prices, has created a perfect storm for inflation.
It's like too much money chasing too few goods.
Exactly. And now central banks around the world have to figure out how to cool things down without causing a recession.
So it's a delicate balancing act.
Absolutely.
Okay, let's shift gears one last time and talk about something that can really shake investor confidence. Corporate fraud.
Yeah, that's never a good thing.
What are some of the most common types of corporate fraud, and what can we do to prevent it?
Corporate fraud can take many forms: cooking the books, insider trading, bribery, money laundering. It often involves people within a company taking advantage of their position to enrich themselves at the expense of the company and its stakeholders.
So it's not just about the numbers, it's about ethics and doing the right thing.
Exactly. To prevent corporate fraud, we need a multi-pronged approach: strong corporate governance, independent audits, whistleblower protections, and a culture of compliance and ethical behavior.
It's so important for companies to prioritize ethics and transparency, not just to avoid legal trouble, but also to build trust with their investors
Customers.
and employees.
Absolutely. Corporate fraud can have a ripple effect, damaging reputations, undermining faith in the markets, and even destabilizing the economy.
Well, we've covered a lot of ground today, from Bitcoin to the metaverse to inflation and corporate fraud.
It's been a wild ride.
What's the one thing our listeners should take away from all this?
The financial world is constantly changing, and that means there are always opportunities and risks. Staying informed, being adaptable, and having a solid investment strategy are more important than ever.
Great advice. Thanks for joining us on this deep dive into the financial markets. We'll see you tomorrow morning with new headlines from major financial magazines